Afternoon, everyone, and welcome back to King B's Weekend Ramblings podcast. Bit more of an overview this one, not really share specific, but a bit about what's been going on in our group and a bit about how the group is run and how we can keep pushing forwards. So first up, a lot of discussion around Prem the last couple of weeks. Obviously the letdown with November and December being missed in terms of deadlines. There's a meeting tomorrow on Monday to look at GR, questions being posed, what comes next. I did do a big deep dive into Prem and the timelines around it, and it'd be interesting to see whether GR answers the questions robustly, what has been done next, and whether shareholders can get some confidence behind what he's saying and get some relief about what has been happening over the last couple of weeks, months, years with Prem. Next up, the resurgence of crypto, and especially the link to Bitcoin and the rises there. Now, what I will say is a lot of the conversation is around GST technologies, rightly so. There's a lot going on there in terms of their platform, their app, their exchanges, Anglo Global purchases. There's lots going on there with the company. But like I would say for anything really, even though, yes, shares can be linked to rises in Bitcoin and look at QBT and the work they can be doing in the sector, it all comes down to profit. What we put into a business, financially, dilutionary, needs to come out the other side turning a profit. So if you buy something for £800,000, it has to turn 800,000 plus to be a profitable purchase. Now, what I see with a lot of AIM companies, and this is not GST or QBT related, is that a lot of purchases get made using dilutionary shareholder money and SP reducing to increase asset value, but those assets then decline over time. So what needs to happen, for example, with GST, unlike any other, is that it has to turn a profit. It has to prove, for example, that Anglo Global can go from a relatively small revenue generating business and bring together all the bits they've got with their bringing that Anglo Global with recent asset purchases, acquisitions, bring them together to a really good, profitable business for shareholders. Obviously, there are two types here. There's the trade on these shares linked to the Bitcoin rally and linked to how they function, the things behind them. Vinaz is brilliant. What a great tip that was in our group. 170% up. Again, though, it's all about what comes next. Yes, the traders and sentiment and everything will get behind a share, but what investors now need to see is growth. True, profitable growth. How many AIM and small cap and, people talk about main market. It's not AIM, it's main market, but there's less nomads. There's no nomads. So, there's actually less regulation behind some main market, and they get away with just the same as they do in AIM companies. So we need to think about the fact that it's still down to profit. It's still down to turning all this business into real profitable enterprises. So next up, the group. So let's look at GGP, Greatland Gold. I did a podcast this week around Greatland Gold, put it out, and rightly, and I think really good. I was challenged on a 5% statement I made about an option in relation to the 60 million that GGP could receive or give over, depending on how the option was arranged. Now, I was rightly challenged on this, and I think this brings me on to my last point, really, is that groups, in Telegram, LSE, ADFN, people who commentate on shares, people who do podcasts, people who write research notes, all should be challenged. We should open ourselves up to challenge, and we shouldn't be so egocentric or so focused on making money for our own pockets that we actually allow ourselves to be open and honest to challenge. The more we challenge each other, the more holes are found. The more holes that are found, the less likely we are to lose. Because yes, AIM and small cap, there are so many sentiment driven shares out there. And yes, we can make loads of money. But do you know why the AIM market is down so much and small cap is down so much? Because there's so many people under. And the reason so many people are under is because they buy the story. They buy the sentiment. They buy the glossy front cover. When really what we should be all doing is working together to get under the bonnet. You know, when you buy a car, yes, you buy the car and it looks great. But what's its reliability? You know, how long will it last? Because you don't want to spend 20 grand on a car for it to pack up in 6 months. You want to buy 20 grand on a car and at least have some value longer term and see you to A to B for as long as possible. So a lot of these companies put a glossy front cover on, but what we need to do is really look at what is under the bonnet of these shares. Look at the finances, look at the profit, look at the revenues, look at the management, look at their track history. And this is where Greatland Gold is for me, you know, this is why I did the podcast, because I believe the shareholders know a shed load of information. But tapping into that is important. Also, the management team are doing a cracking job. They're actually going to be doing proper feasibility studies with like 90,000 meters drilled. You know, Prem rushed it, didn't do a DFS. So again, for me, it's about finding red flags, not because we want to hunt for them, but because it makes us better investors. But also, really, it's about going, right, are the management doing the right thing for the company to turn it into a profitable business? Yes, this acquisition is brilliant, glossy front cover, but will the acquisition turn into a really good business opportunity? That is down to the management. That's down to the company. So a lot of the shares right now have got a lot of talk behind them, but it needs to prove that talk with actual figures and numbers. You know, again, Chill brought out another RNS this week with no numbers behind it. Yes, visibility is increasing, but to prove a business is all about profit. It's all about the numbers. So when you're looking into an investment or a trade or anything, we need to think about the risk factors. Because if we don't look at the risk factors and allow ourselves to be challenged and debate, like today, Sunday, day of rest apparently, not for our group, because we're still digging into things. We're accepting challenge. We're accepting people discussing things in a way that opens our mind up to going, oh, actually, I didn't consider that. I need to go and have another look. And it's just that really. We're not here to tell you to buy and sell. We're not financial advisors. That's not our game. Our game is debating around stocks so that we make more informed decisions. This podcast isn't financial advice. It's about discussing things in a way that opens ourselves up to direct challenge and being better investors and traders long term. It is a learning process. And sadly, a lot of learning is happening through mistakes rather than that's reactive learning. What we want is proactive learning, where really we're learning on the spot before making that informed decision. So that's my sort of summary for today. And I think we can push forward better if we keep driving for real change around the debate around stocks. And that is my goal. Everyone, hope you had an amazing weekend. Have a cracking week next week. I hope all your shares smash it. And I'll see you Monday.